All right. Good afternoon. Let's see if anyone, see if more people turn up. Hey there. Hey there, bro. If you can hear me, give me a big thumbs up or leave comment in the chat. Good afternoon. Good afternoon. Good to see you here nice and early. So let's give it a minute or two as we have a couple more people streaming in. Can you hear me? And just checking if you can see the screen that I'm sharing right now. So the strategy clinic today. Hey Zoran, how are you doing? Super, awesome. I'm doing well. I'm doing well. Markets are moving quite interesting as we lead up to the ECB news tonight. So wasn't expecting that much of a move before the news, but it's getting quite interesting. So due for a good trading session as well. All right, so if you have any questions, today is the strategy clinic. So if you do have any questions, please feel free to put it into the chat, ask a question, let me know how you trade, and then I'll be happy to give you, my couple of comments, a couple of cents worth of comments and opinions. A minute more and we'll get started. All right. Where are you guys tuning in from? Where are you tuning in from? Let me know. Wow, Macedonia. I'm getting everyone. I'm starting to reach out to everyone all around the globe. Fantastic. Italy. Wow. Hey, there's a big news there. Mario Draghi resigning as prime minister, but asked to stay on as caretaker. So that's one of the reasons why we've seen some big moves in the market this afternoon. All right, let's get started. Welcome again. Thank you for joining the session. We are here to do the strategy clinic with Vantage here. 21st of July 2022, Thursday 5 p.m. here, GMT +8. I'm in Singapore. My name is Jin Dao. Everyone calls me Jin. So if you have any questions regarding your strategy, your trading strategy, please feel free to put them into the chat, ask a question. I'll be more than happy to share with you how I approach the markets, how I look at the markets. And then if I have any opinions or thoughts on, if you're sharing with me your trading strategy, I'll give you my views and opinions there as well. And if we have the chance, what I'll do as well is to jump into some chart analysis. I'll show you how I look at the charts, how I look at the fundamentals. Leading up to that, we'll look into some possible trade setups that we could jump onto as well. Right, so as we talk about trade setups, as we talk about possible trade ideas, quick disclaimer as usual is that any information, context, or opinions expressed in this webinar, in this Zoom webinar, on this presentation, and on the following slides are solely those of the presenter, myself, and not necessarily those of Vantage. So please use it for educational purposes only. They do not constitute investment advice or consultation on how a client should trade. Basically, what it means is that you should be doing your own due diligence before you jump into any trades, regardless of what I share with you here. Please make sure you check your risk, right? Check your trade size, check your risk, make sure you're not over leveraged, make sure you're not over trading, because from my experience, what I've seen is that traders don't really lose that much or that badly through a bad entry, right? They lose more, they get hit harder when they have bad entries together with over risking or over leverage or over trading, right? Even a good trade, even a good setup can turn to be horrible or terrible if you don't manage your risk properly. So make sure you put that as the number one priority, manage your risk, do your own due diligence before you jump into any trades. So just doing a big introduction here of the team of analysts. We do usually have Desmond during the session, but he is a little bit unwell. So I am jumping in here. So Desmond is the chief trader. We have Cassandra and myself as the prop trader, and we have a team of analysts to support us as well. So I have been trading for, I always say I've been trading for about 10 years now, but it's slowly creeping to 12 years. The way I look at the markets, I look at the fundamentals first. So I look at the economics behind why prices are likely to be moving higher or lower. Then after that, I look into the charts to tell me, if I anticipate the markets should be heading up, charts looking like it's pointing down, I'll wait for a buying opportunity. Or if it tells me it should be heading up, prices are going up, I'll be looking at jumping, following that momentum towards upside. So I use the fundamentals to drive the technical aspect or the overall view of my trading strategy, right? Fundamentals first, technicals next, then to whether to enter the trade, whether it fits my risk management or my risk profile there. With that, what I also do is most of my trades are trend following trades. So I do trend following more than counter trend because trend following trades do have a higher rate of success. If I do encounter a counter trend scenario or we come upon counter trend scenarios, what I'll do is I'll usually sit out, I'll wait for it to resume back into the trend before I get into my trades. So sometimes what I end up doing is I end up sitting there watching charts, not doing too much because it's in a counter trend scenario. So you don't always have to jump onto a trade. Sometimes if you're not in a trade, you don't bear that risk, you don't have any risk exposure, it's a safer option rather than forcing out a trade for a setup that you might not be most comfortable with. I do coaching, I do teach people how to trade as well. And what I've actually found through my experience is that trading or trading strategies is not a one size fits all kind of system, right? The way I trade might work very well for me, but it might not suit or might not work very well for you because it could be just a different risk profile. It could be different trading time that you have spent looking at the charts, right? If you look at it during the Asia session or during the US sessions, it would just be different time spent in front of the charts or different amount of time spent as well. So I'm trading full time here. I look at the charts pretty much from in the morning all the way to at night. I'm looking at the charts all the time. Most retail traders like yourselves or everyone attending here, you probably end up not looking at the charts too much. You probably not have that much time looking at the trades. So just a little bit of a tweak, different ways to approach the markets, depending on your capital amount, depending on your risk profile, the time you have spent in front of the charts, and also the trading experience that you might have before you get into a trade. I am coughing a little bit, so bear with me on that. I might get into some coughing fits through the session. This session is recorded as well, so please, if you jump in halfway through the session, or if you feel like you want to catch back on some of the topics that we're talking about, catch the session again. You can always pick up more tips and little hints through the session, the more times you watch this webinar, right? With that said, let's get into it. I'll share with you next. I don't see any questions coming in yet, so I'll share with you some thoughts or trade setups that I think might be quite interesting. So let's look at it. So if you can, if you're looking at chart at the pound dollar chart right now, let me know, put it into the chat so that I know it's working well. Everything's all good. Super, super. You can see the chart. Good stuff. All right, good. Thanks for that, guys. Straight away, we have a couple of questions here. The Kiwi CAD, Kiwi Yen, US Yen, and US CAD, please. Yes, for sure, I'll get through those. Got a couple of other requests. Okay, so it's quite interesting. We've got a question here on the Kiwi Yen, the US Yen. So it's quite interesting that we're looking at the yen, a bit of the focus on the yen pairs, because if I show you here now, where I get all my news from is on Forex Factory. You know, use that as a way to plan your trading schedule. I use it as a way to plan my trading schedule because I know what's happening at what time. Today at 11:05 a.m. GMT +8, what we actually had was the Bank of Japan releasing their monetary policy statement, right? The Bank of Japan releasing the monetary policy statement together with the outlook and the press conference. I can tell you that I did not watch the press conference. It was not available, but you know, I don't know Japanese, so I didn't watch that. But I did read the monetary policy statement, and you can actually get it there. All right, so if you did get onto that, oops, why is it not loading? Okay, there you go. What we actually found was that the Bank of Japan did not make any changes to their monetary policy path or their path of monetary policy. They are still keeping rates at a negative interest rates of -0.1%. They are still looking to buy with no upper limit 10-year JGBs, which is the Japanese government bonds. With all that, they're still looking at buying 12 trillion yen and 180 billion yen on a monthly, where is it? I think it was on a monthly basis, right? And 2 trillion yen on CP and 3 trillion yen on corporate bonds. So what we can see is that the Bank of Japan is still adopting a very loose monetary policy approach. What it means is that they are still printing money, they're still pushing money into the markets, they're keeping rates at negative, they're still buying bonds, that means they're pumping more money into the markets, and that's massively different compared to all the other central banks. We have the US Federal Reserve already increasing rates, we have the Bank of Canada, the Reserve Bank of Australia, the Reserve Bank of New Zealand, or increasing rates. Tonight, we do have the ECB, the European Central Bank, looking to increase rates for the first time since 2011. So everyone is increasing rates. The Bank of Japan is still keeping rates at -0.1%. So what we expect to see here is continual yen weakness, right? So this is how I look at it. I look at the news first. I'm thinking, okay, continued yen weakness, we should see the yen get weaker. So with that, I'll look into the charts. Pardon me, hang on a second. I'll look into the charts, let's say the US yen in the first place, just to elaborate and show you what happened. Looking at the US yen on the H1 time frame here, this is where the news happened. At 11 a.m., this was where the news happened. We saw a big move towards the downside, a recovery towards the upside, and price sat pretty much unchanged between the 138 round number to 138.40 round number. It sat right there, right? Why did it sit right there and not shoot up straight away? It's because we saw during that time, markets was expecting maybe the Bank of Japan would be a little bit more dovish. They might change policy it might make it a little bit looser again. So we were thinking, could it push higher straight away? And also because if you looked at the dollar index at the 11 a.m. time, we did see, 11 a.m. time, we did see the dollar weakening during that period, right? This is 12 o'clock. We did see it sit there, bounce around. We did see it come down, sit there, and then turn down lower. So when we look at the US yen, it should have gone weaker, but the dollar weakness pushed it down. We didn't see a clear direction. What I would have done, or what I did, was that I stayed out. Despite anticipating the yen to get weaker, expecting the US yen to push towards the upside, I stayed out because price wasn't showing me that direction. Price was still showing me a downside move. So I sat there waiting for it. As it turned down, I did nothing. And then as it turned back up, I still did nothing, because what I was looking for is for price to break above that 138.50 level, right? 138.50. Why that level is because we saw that at the 11 o'clock time frame where it hit, test, and rejected that level. And also we saw that test at that point where we saw it hit, test, and reject. So I wanted price to close above that point before I would look into a buying scenario or buying signal, consider it a buying signal. And what happened was that this is the 5, this was a 4, and this is a 3 o'clock. We saw price shoot up and break above that 138.50, signaling potential further upside on the US yen. Where could it get up to? I would say the ultimate level here would be the 139.23 or 139.25. Because that's where it hit and it turned back down from. So I'll be looking for that move towards upside. I can tell you that I did not get into this trade because I knew that I'll be doing this session right now. So I wasn't going to get into the trade and then be worried about it while we're doing the session. So I tend to like to watch my trade run as well after I've entered it. So I manage my trade a bit more closely. So I didn't get into this trade, but that was a good setup. This would have been, if you did get onto that trade, you could see it close above. I would always wait for the candle to close before I get into a trade. You would say a buying opportunity above 138.50. So let's say 138.58 there on the close of the candle. Stop loss just below that point at about maybe 16, 20 pips towards the downside, and then about a 60 pips towards the upside, a 1:3 risk reward ratio towards the upside on the US yen. At this point right now, question came in is it too late to get into the US yen right now? I would say that probably might be a little bit too late because it is approaching that level, the 138.80 level. We saw a lot of volatility trading between this range. We saw it test this level before breaking towards the downside. We saw rejection here as well. You can see a rejection at this point here as well. So just be a bit more careful at this level or this of 138 if you want to, if you have to get into a trade on the US yen. What I would say is let price go up, let it break above that 138.85 level before looking at another buying opportunity. In this time, it'll be a bit of a shorter trade, a quicker trade. You could be looking at above 138.80, say 138.90, tight stop loss about 15 pips, just below that interim resistance level, might turn into a support level, and then a 30 pips towards the upside towards that 139 level. Again, it's still a 1:2 risk reward ratio towards the upside on the US yen, right? So, hey Batips, glad to see you join us, right? So if you have missed out that first move, what I'll be looking for is for this to continue up, break above that point, and then we could see a further move towards the upside on the US yen. All this is also highly dependent on what the dollar index is going to do, right? Dollar index on the H4 time frame, you can see it found a good support at 106.50, at about the 106.50 level. Now pushing towards the upside, I would say that it needs to, as much as it's a very strong push or has been a very strong push, I want to see price break above that 107.30 level before we can actually think that this is going to have a sustained move towards the upside on the dollar index, right? So I'll drag that across and you can see why I consider that 107.30 level as a key point, because it tested it several times here. Only when it breaks above, then we'll see that continue towards upside. So might be a little bit early, might be a bit late towards, actually might be a bit late towards this move, but let this move up, let this close above, or see whether it'll close above 107.30 before anticipating further upside on the dollar index. Hey, Batips, if you have any questions, please feel free to put it into the chat. I'll be happy to help you through those. So as we looked at the US yen, the next thing to look at, let's look at Kiwi yen. So this was an analysis I did previously about a week ago. Right, price was sitting at that point, just at that 84.55 level. I saw that if it did break above the 84.70 or .70 or 80 level, we could see it push towards the upside. Or if it broke lower, we could see it push down. It didn't break lower, so I'll take that away. And quite happy that it went up. It actually broke above that 85.50 resistance to climb towards 86.55. So what to anticipate on the Kiwi yen at this point will be to see what's the Kiwi is doing, right? You can't trade the Kiwi yen just by looking at it. You need to know what the Kiwi dollar is doing. So looking back to the Kiwi dollar, you can see that it has that big drop. It's been dropping downwards. I'll take away all the drawings. You can see that big drop recently, since it hit that 0.6270 level. It's come all the way down, now trading at 6187. At this point, this big move, we know it's because of that recent dollar strength we've seen. What we're going to see here now is whether price can break below this support level. You can see that it's a resistance that was tested several times early in July, recently on the 18th of July, and right now it's come back down to test the support level again. If we do see price come down, test that level and test and break this level, what we could anticipate is for the Kiwi dollar to keep heading lower, possibly towards the 0.6085 level. This is quite a big move towards the downside. This is quite a big move, about 100 pips towards the downside. I don't think you'll get there in a hurry unless we see big upside on the dollar index. But what this means is if the Kiwi dollar does come down, if the Kiwi dollar does trade lower, what we could see on the Kiwi yen is that push. I'll take all of this away just to clear things up. Right, so if we see the Kiwi yen if we see the Kiwi dollar push lower, we're likely to see the Kiwi yen come down, right? Because that weakness in the Kiwi could push the Kiwi yen down. Wouldn't do anything right now. I'll wait for it to come down below that 85.52 level before I'll look at a possible selling opportunity towards the downside. I would be looking at a possible repeat of what happened here. We saw it come down. If it breaks below this point, then we can see it trade lower towards that 84.50. Might see a bounce again, ultimately we'll look for it to come down towards that 83.26 level. This 83.26 level is likely if we do see the Kiwi dollar drop significantly towards the downside. So what I'll look for here, just to answer your question there, Deborah, is to look for, to do nothing right now, but I'll look for price to break below that 85.50 level to trade towards the downside towards that 84.50. All right, does that answer your question? Happy so far? Good stuff. Good stuff. All right, I'm just checking the chat. Super. All right. So with that, another one was, as we look at the Kiwi yen, we look at the Kiwi CAD, New Zealand dollar against the Canadian dollar. Previous analysis, I keep referring back to previous analysis because it's all drawn up here. We were expecting that move to continue towards that resistance. Okay, so this is one reason why resistance levels or support and resistance levels are so important. It's because you can draw it once, and if it fits, it works, it will keep holding to that point. We saw this push up, hit that level, turn back down towards this support area, bounce back up, test, and turn back down again. Same thing as what we're looking at on the Kiwi yen is if we do see the New Zealand dollar continue with its weakness, if we see it continue with its weakness, we're likely to see this track lower. We're likely to see this track towards the downside, especially as price looks to break below this, or looks to close strongly below this 0.8 level. But be extra careful here. I would say be safe, on the safer side. You want to be looking at, only looking to sell down if price breaks below 0.7980. Because we saw it come very close before bouncing back up. You want to see the candle actually close below that point before looking for potential trade towards the downside, towards that 7943 support level. All right, so sorry about that big coughing fit happening again. With that, as we look at the Kiwi CAD, what I'll do as well is I'll look at the US CAD, the loonie, right? And the loonie was actually quite interesting. I've been waiting for this to happen. It looks like it's going to happen, but again, looks like it might be struggling a little bit. Is that I saw that move towards the downside. I know that there's a good support level here at 1.2820. I was looking for a bounce towards the upside, and I was quite interested. I can show you this on H1 time frame. I was quite interested when I saw that level form. When I saw that level form and I saw price push towards the upside, but at this point right now, it looks like that upward move might be losing some steam on the US CAD. I think what we might actually see is whether that 1.29 level is going to hold, because we saw it test that point before tracking back down again. I'll be looking to see whether it's going to hold, that support level is going to hold, or is it going to retrace back into the range. With the way the dollar index is moving, testing that 1.0730 level and retracing a little bit, I'm looking at the US CAD possibly coming back down, testing that support level, and then looking for that possible bounce towards the upside. So what you could be looking for here is I would say I like the 1.30 level as a next resistance. Question was, what about a retracement to 1.2940? 1.2940. Oh, you mean a continued push upwards before I track back down? So a question just came in was, what if it went to 1.2940 1.40 there. Quite possible. Quite possible. I would say that it would be dependent. Upward move will be dependent on the dollar index. I would say that if the dollar index does push up, above that 107.30, then we're going to see the US CAD push towards the upside. Because at this point right now, if we went back to the news, you can see that there's not a lot, or there's no CAD news to be released for today, right? So apart from the NHPI month on month, which is the change in the selling price of new homes, not much news for the CAD, which could there's no stimulus to push towards the upside. It will all be highly dependent on the dollar index. So just be a bit careful anticipating that. I think what we might, or the way the price is moving, what we might see is a little bit of a pullback towards the support before that push towards the upside, and possibly, if it goes strong enough, towards the 1.30 resistance level. A lot of things needs to happen before that occurs. So just watch. I would say watch the dollar index and how it moves before it can translate across the board for all the other pairs, right? What we were looking at that as well. Super glad to have answered your question there. With that, if any of you have other questions, please feel free to put it in. What I want to jump onto now, before you get your questions in, is that here we do have, this is 8:15 a.m. Let me just change the time. So at the GMT +8 time zone, at 8:15 p.m., we do have the Eurozone's news, the ECB announcing the monetary policy statement with the main refinancing rate. That's the interest rates decision, right? So you can click on the details there. Interest rates on the main refinancing operations that provide the bulk of liquidity to the banking system. What you see is that you're looking to go from a 0 to a 0.25%. So a 25 basis point increase to come from the ECB. What they actually have been early into the week, I think it was early into the week or late last week, where members of the ECB came out and said that they were actually considering a possibility of a 50 basis point increase, right? So they were widely expected to do a 25 basis point. They came out and said that, hey, 50 basis point is on the table, up for consideration as well. Because of that comment, what we actually saw on the euro was that big upward move. We saw that big upward move because of that comment from members of the ECB. But what has actually came about, we're still waiting for the news to be released. Just be extra careful here. This 0.25% increase or 25 basis point increase has been signaled out to the markets for a very long time, since the previous meeting, right? Since the previous meeting in June, they've already signaled that they're going to increase rates by 25 basis points in the coming meeting. So I'm looking at this as, if they do release rates at 25 basis point, it could be a priced in scenario. Markets have been pricing in that 25 basis point increase. So we could see a bit of a disappointment from the markets despite a rate increase, right? Everyone's expecting it to happen, and it does happen. It comes out as expected. No big surprise there. We might actually see the euro dollar continue lower, right? So this was one of the analysis I did, looking at that range, looking for price to break either towards the upside if it broke above that 1.0270 level, or towards the downside if it broke below the 1.0219 or 1.0220 level. So what's happening right now is it's looking like it's starting to track down. I think this is a brief move towards the downside with price sitting at that 1.017 level, might sit there or close to this range leading up to the news event. If they come out with a 25 basis point, no big surprises to the market, no further comments or hawkish comments about a more aggressive rate increase. Think about it, we're comparing the euro dollar against the US dollar. The euro at a 25 basis point increase, first time since 2011. The US, the Federal Reserve, have been increasing rates quite aggressively, 75 basis points, 50 basis points increases. The differential between the interest rates for the Eurozone and the US dollar is likely to push the euro dollar down back towards the parity level if the ECB disappoints with possibly only a 25 basis point increase. In my view, I think that we're unlikely to see a 50 basis point increase. I think that's a little bit too early. They might temper the volatility by trying to say that they've done 25 basis point. Now they're looking at a further economic data to justify a more aggressive approach into the next meeting. So that could be one of the lines to come from the ECB and a press conference from President Lagarde, is that they might say, we've done 25 now, but we're looking at a more aggressive approach in the September meeting, right? So watch out for that. Or was it August or September meeting? So watch out for that. I think that we could see price turn down towards the parity level if the ECB only does a 25 basis point. Hey, put it in the chat. What do you think? Do you think the ECB is likely to do a 25 or a 50 basis point increase tonight? We do have a couple of members or attendees in the Eurozone. So let me know, what is the feel on the ground? 25 basis points, 25, right? No one's thinking about a 50. So, that is a market view. That's a market view. So if we do see that 25, we might actually see prices track lower as well. They have no backbones to do 50. Well, that is true. They do need to do something. But some of the countries do need to be protected. We're waiting for the introduction of the anti-fragmentation tool as well. So I'm still looking into that, looking to again get some details of that, but we haven't got any hints of what the anti-fragmentation tool is going to encompass. So once we get more info on that, I'll be more than happy to share it with you guys at the next session. With that as well, one more key point to pay attention to as well is on the political front, Italy's president asking Mario Draghi, Prime Minister Mario Draghi. He used to be a central bank chairperson of the European Central Bank, now the PM of Italy, to continue on as caretaker because he has told Parliament that he will resign. So bit of instability, a bit of uncertainty there in Italy with the political front. And if I'm not wrong, they do need Mario Draghi in there to drive the entire fragmentation tools and to drive the policies introduction from the ECB. So that's probably one of the other reasons why we're seeing that weakness on the euro dollar at this point as well. The news coming from Italy about Mario Draghi, Prime Minister Mario Draghi, resigning from the top row, right? With that, any other pairs you'd like me to look at? If not, I'll go through my favorites. All right, I'll go through my favorites then, while you guys think about what else the questions you might have. the Aussie dollar, right? Aussie dollar tested strongly towards the upside, tested that 0.69 level because the RBA Governor Lowe did come out and say that, hey, inflation is likely to be at 6 to 7% for Australia. And because inflation is likely to be at 6 to 7% for Australia, we're possibly going to have, or they're possibly going to have to increase rates at a steady pace. That's actually why we saw the Aussie dollar push towards the upside, right? That's why we saw the Aussie dollar push towards the upside. But when you think about it, inflation climbing with anticipated high inflation and with interest rates expected to go up, the risk of a recession in Australia is going to be a lot higher. The RBA did, or Governor Lowe from the RBA did previously say that they do have a path towards helping Australia avoid a recession. But if you consider a high inflation and high interest rate situation, that's why we're seeing some cap, a bit of a cap towards the upside on the Aussie dollar for it to turn back down right now. I think it's all, again, back to a little bit less, but back to the dollar index strength. That's why we saw that push towards the downside. But anticipation is the concerns of a global recession, the concerns that Australia might not be able to avoid a recession is what's weighing it towards the downside. If we do see price, you can see that I just highlighted that level there at 0.68, about 0.6860. If price does break below this point, this resistance and support here is going to become, a broken support, which could see price push towards the downside, right? So something to consider there on the Aussie dollar on the H4 time frame is that if price breaks below that point, 0.6860, we could see further downside, possibly towards the 6710 level. I think that might be a bit of a reach. We might even see first target towards 68 and then 6760, followed by 6700 as a round number, right? So not ready yet on the Aussie dollar, but something that's setting up quite nicely. We've done the dollar index. We've looked at the euro, possibly towards the downside. Any advice on that challenge? Planning to start in September? I would say that, well, I don't know. I haven't got a view of how you are trading, but I would say that you don't have to, I would approach it in the way of, manage your risk first. It's always about risk management, especially during the challenge. And also that you don't want to force out trades. Don't think about trying to catch it, to try and force a trade out. I think that in September might be a relatively good time to get started on the challenge, because that's when we're likely to see a little bit more volatility. So typically we see volatility in the markets increase during that September period. So it might be a reasonable time to get started. What I would hint, a totally different way of looking at it, is that look at how markets are setting up before you start the challenge. If it's still in that big ranging scenario, right? So if I zoom out, you can see if markets have been in that kind of ranging scenario, then it's going to make trading a lot harder, especially during the challenge. If you see it more towards a trending scenario, then hey, go for it. Makes trading a lot easier when you see that happening. So for example, a couple of months ago would have been a great time, because we saw that dollar index climbing strongly from June all the way from that 102 level all the way towards the 109 level. So got into a good trending situation. Just had to follow the trend, right? So I hope that would help you, and I hope you actually succeed through the challenge. Please let me know. Please follow up. Let me know how you go with that. And if I can help you with any other way, I'll be more than happy. Good stuff. All right. That really picked my brain. I was just thinking something totally different. Fantastic. So euro dollar we've done. Pound dollar, still looking at potential downside. It's slowed down. That big move towards the downside has slowed down a little bit because of that dollar getting a little bit resisted by that 107. So I would watch that. I still do think it's going to come down. Bit of an interim support level there from what happened a couple of days ago. So I'll be watching that with a bit of intensity to see whether it's going to break past that point towards the downside. Could happen like on 11th of July when it broke that support level. It went down quite strongly. So you notice that every time most of the time when I'm talking about charts and trades, I do mention that, you know, wait it out, not ready yet, unless it breaks below a point before I'll get into a trade. That's how I would approach the markets. I'll have all the plan. I know what I'm waiting to buy, what I'm waiting to sell, and then I will start plotting possible price levels or possible entry points, and then I'll start prioritizing which trades I want to look into, whether it's a trend following trade, whether it's a counter trend trade. That's how I would sequence my ideas. All right. We looked at Kiwi dollars bouncing off the support a little bit. US CAD, do think it might go up, but might take a bit of time. The Swiss franc hit that resistance, turned back down. I was anticipating, I don't think this is going to happen. I was anticipating a push, a stronger push towards the upside to test that 9755 level. Hasn't done that too strongly, sitting right across. I would say that it will most likely come towards that resistance. Whether it's going to break above strongly, I'm not too sure yet. But you know, it all depends, again, back to that dollar index. US yen, we were looking at this before. Remember the setup. It's hit that resistance level. It's turned back down. Not ready to get into it yet. If you are in a trade, possibly, you know, might want to see whether you want to get out of it, just to be careful, because it is tracking back down. The dollar index is tracking back down again. But we could be looking for it to push above that 138.83 level for further upside. Right? Oh, my voice is going. So before my voice totally disappears, a couple of trades here. On which time frame do you analyze, place, and monitor your trades? Great question there. So what I actually do is I would always look at my trades first on the H4 time frame. Well, I'll look at my chart. I'll look at the news first, then I'll look at the charts on the H4 time frame, because I do my lines, I do all my analysis on the H4 first, and if it sets up, then I'll get into a trade. So for example, Aussie dollar on the H4, if it sets up nicely, I'll get into trade. If it doesn't set up nicely on the H4, or if it's, let's say, the pound dollar here, anticipating it to break that point, but it doesn't, but we've seen that push towards the upside, then I would say, okay, now let me look at the H1 time frame. Is there anything forming? Could this possibly push back towards the upside? Then I'll start looking. This is a bit of a tweezer bottom scenario forming here, so something to watch. But could this push towards the upside? So I'll look at it on H4, then to the H1. For myself, I also do look at the M15 for my intraday trades. When there's a news event, I could even look at the 1 minute time frame. But for all retail traders, most retail traders, what I always say is that you don't have that much time to sit there and monitor the markets over and over and over again. You might have a couple of hours a day if you're lucky, or a couple of days a week to trade. So I would say look at it on H4, look at it on H1 at the very lowest. Before, don't try anything less than the H1. I wouldn't suggest too much on the daily time frame either, because what happens on the daily time frame is you end up having to wait for a very long time for any setups to happen. You need to wait for the candle to close. You need to wait for the move to happen before you get into a trade. So there's a lot of waiting, and unless you have a big account, what happens is that you will sit there for a very long time holding on to a trade. Because if we looked at this, for example, on a daily time frame, and you're looking to trade towards the upside, that move since the 15th from 1.1835 all the way to 1.20 could happen. But if you missed out by just a little bit, within the next day, you'll see that move reverse quite strongly again. So just be extra careful on the daily time frame. I feel that it would be a little bit safer in the scheme of things, but in terms of time spent and overall reward, probably not too worthwhile, because you might be trading smaller because your stop losses might be a bit wider on the daily time frame. So I do think that for retail traders, the sweet spot 4-hour, 1-hour time frame would work very well for most retail traders, right? What do you do? What time frames do you trade at? What time frames do you look at? Is there any preferred time frame? All right, let me know. One more thing I want to show you, a couple more things I want to show you is gold. Gold on the H. You look at it, you say, okay, reply is analyze on the daily, it plays on the daily or H4. That works too. I think maybe, like how I started the session, I said that it's not a one size fits all. So if it works for you, super. I tend to have a little bit less patience waiting for a daily setup to happen. I do prefer to have my trades I manage my trades a little bit more closely. So I look at it on the H4, H1, and M15. That does tend to happen. So I have seen that as students and clients and traders try to take on the daily time frame, what they actually end up happening or realizing is that there might be few trades far in between, right? There might be a few trades far in between, which leads to the scenario where they try and rush into a trade. They get in before the setup actually completes, which leads to that mistake. So something to consider. The time frame might be a little bit too long before the setup happens. So you might consider just trying the H4, just keeping on H4 time frame. That could help reduce some mistakes, because you're not feeling like you have to rush into a trade. All right, I hope that helps. With that as well, I was looking at gold. Gold yesterday, just yesterday, I was looking at this. I was looking for it to break below 1700. Did that straight away. Today broke below 1700, went straight down to that 1684, 1683 level. At this point, be extra careful. If you're trading gold, be extra careful, because if I went to the daily time frame and zoomed all the way out, you can see that the last time it got to 1684 or 1683 was back in March 2021. March 2021, April 2021, and again in August 2021. And what happened every time it hit that point? I'll drag this right across. Every time it hits that point, it shoots straight up. It hits that point, straight up. It hit that point, it didn't even close near to that point, it went straight up. So right now, we're at a similar situation where price is at that point. The only difference here is that we're seeing, in comparison, this was one candle shoot down, hit and bounce, a big candle shooting down, hit and bounce. What we're seeing here is a slower move towards that support, two candles moving slowly towards the support. What I think we might see is a break of that 1685 level, but I still do think we might see it bounce back up again. So it might look like a bit of a fake false break lower before a big retrace towards the upside. So just be extra careful there on gold. I feel that this might be a trap that would catch a lot of traders, as everyone thinks that it's going to keep going down, and then you keep selling and might have one big rebound that will totally wipe out all your profits. So just be careful there. How to be careful of this is not just to sit out, but you could be trading it towards the downside, but don't keep holding on to a position. Trade it down, hit the next level, close it out, reevaluate, look to see whether it's going to continue down with strength or not. So do multiple trades rather than just one. Try and hold on to one big trade towards the downside. All right. With that, any last questions? Anything else you would like me to help you with? We do see oil crashing down now from that 108 no, from that 108 level now down towards 103. We do see Brent for UK oil coming down, and also WTI coming towards the support level. That downside move possibly triggered a little bit by the dollar index pushing towards the upside. That retrace hasn't translated over to energy prices yet. So I think that anticipation is for the dollar to push higher. That's why we see oil prices or energy prices turning down. All right. Right. So any other questions? Anything else you would look at? The next time, possibly what we'll look at is for you to share your trading strategies, and I'll be happy to, again, like what we've just done today, give you some ideas. If you're trying to do a challenge or looking at different time frames, some thoughts of what I have seen or what I think you could tweak to possibly try and make your trades maybe, hopefully, be a bit more profitable as well. Right, so super. I'm glad it has been helpful. Fantastic. I hope to see you at the next session as well. Fantastic. Thanks for that, Zoran, as well. Good. This is recorded as well. So, if you feel like you've missed out on any points, please feel free to jump into the recording and get watch it over again. And if you have any questions, reach out, let me know. I'm always happy to help you through your trading journey. With that, I have no other interesting setups that I would consider. I'll stay away from the yen, the euro yen for now, just because of the news coming up. And that would be it. So thank you all. I hope you had a great session today. You learned heaps. Please bear in mind, tonight we do have big news happening. Volatility is going to be high. What I would suggest, if you are trading during this news event or through this news event, even if it's not the euro dollar, possibly look to size down a little bit size down because we're going to see higher volatility. It's going to be dangerous, right? So just be careful. Just be careful with your trades. Trade well, trade safe, and I hope to see you again. Take care now. Bye-bye.